Good Tuesday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Good. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's a disclaimer. I'm going to share my screen, and while I'm doing that, for anyone joining us for the first time, Will and I, we do these shows in the morning to help answer questions you may have about the Market Chameleon tools, the data or analytics. If you want to come on a show and ask your question live, we do provide a link to Zoom on the live chat on YouTube. So when you click on it, it'll take you over to Zoom. Once you're logged into the Zoom, there's a button at the bottom of the screen, raise your hand, click on that. Then you could ask your question directly. If you prefer to type your question, you can type your question into the live chat on YouTube. Will's watching it. He'll read those questions back. And while we're waiting for more people to join us and for questions to come in, we'll start taking a look at the pre-market report to see if we could get some insights on what's trading in pre-market hours. And then we'll move on to the questions. Okay, so pre-market report. These are stocks trading in a pre-market hours. I'm going to come down here and we see we have a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. When I look at the list, there are 64 stocks that made our percentage gainers list and 239 on our percentage decliners list. So these are stocks that are trading in pre-market hours and have met certain thresholds that we place. So far from this list, it looks like we're setting up for a bearish bias at the open, right? From that perspective. Let's move up here. And we also have this calendar view with summary stats. And this calendar view allows you to go back dates and see what happened in those pre-market hours. But we're going to stay on August 8th, which is today. And so far, this is what's going on in the pre-market hours if we looked at everything from a high level. So 229 stocks are trading higher in the pre-market hours. That's higher than previous day's close. 642 stocks are trading lower. As far as volume of shares, 157.9 million shares are trading on up volume versus 93.8 million trading on down volume. So that looks, that a little bit different than the number of stocks. If we convert those shares to dollar value, because not every share is the same price. So if we convert the volume to dollar value, we see $1.1 billion worth of stock trading on up volume versus $3.1 billion on down volume. So this also indicates a bearish sentiment at the open. One more thing we could do is let's scroll back down to this list. And if we take a look at the list, we see that there are small cap stocks on this list. These are the market caps over here. There are ETFs in there, leverage products. It could be a preferred stock. So any security that's listed on a major US exchange, if it's trading in the pre-market hours and it meets our thresholds, it can make this list. And to narrow down this list, we could use the filters up here. And I'm going to use this one in ETF. And we're going to narrow it down to a small group of stocks. So when you click on this filter, you get a drop-down menu. And you see a list of ETFs to choose from. When you select one of the ETFs, the list below will get filtered by stocks that are holdings in that ETF. So let's do the SPY ETF. That's the broad-based S&P 500 index. And when we click on that, we're going to see that the list below got filtered by stocks that are in this SPY ETF, which are the S&P 500 constituents. And here we see that 3 stocks made our percentage gainers list, 57 on the percentage decliners list. So that is also indicating that we're setting up for bear sentiment at the open. Overwhelming, there looks like, that markets are selling low, selling down today. So we'll give it a few minutes. If there are questions, I'll take them. But before that, a reminder, we are doing a webinar today with Interactive Brokers at 2 p.m. Eastern. You have to register with Interactive Brokers to see that webinar. Will you put that link out there?
I will put it out there, D. Good point.
Yep.
That's awesome.
So that's today at 2 p.m. And we're going to go over different what's called advanced option strategies or complex orders, and we're going to talk about them and when you might apply some of them in what situation. We're going to take a look at their risk versus reward profiles. So that will be today at 2 p.m. Eastern. But Interactive Brokers is hosting it. It's not going to be on YouTube like we do them in the morning. So you do have to register with Interactive Brokers.
And if you register, you don't have to watch it at the time of the event. You can watch it at your convenience.
Yeah,
I've mentioned it a few times. The whole library. I think this is our 28th second Tuesday of the month webinar we've done with them. So there's a whole library of previous webinars that are worth watching.
Yeah. So let's see. I'll take some questions now, Will, if you have any. If you don't, I'll just kind of keep going.
No real questions. Rob did just mention, I saw a headline that Moody's cut the rating of 10 U.S. banks, could have some impact on trading. That was just one mention that everyone should.
Yep. There's some headline news on China. I think like China is not growing like they, or recovering like expected. But while we're on it, why don't we do this? I'm going to scroll down here. We'll stay on the pre-market report. And as you scroll down, you get this other report here that we haven't looked at in a while. And in this report, what it does is it takes the last 20 days of trading and it looks at the stocks that have a gap up or down in the morning. It has to meet certain thresholds, but there's pre-market volume in there and the stocks either gapped up or down. And then what we do is track those stocks after the open to see what happened after the open. Was that early sentiment an indicator of what will follow through the rest of the day? If we're positive in the morning, there's enthusiasm, there's positive sentiment, we open at a higher price, what happens the rest of the day, right? Do we continue going higher or does it fail and retreat? And then we do the opposite on the stocks that are down. There's bearish sentiment at the very beginning of the day. The assumption is that there's maybe some kind of news, some kind of event, something where it motivated people to trade into pre-market hours to move the prices. And what happened after the open the rest of the day? Did it follow through? Did it close the gap? So these are the questions that this report is trying to answer. And what I'm going to do is we see that this includes any stock, right? Anything traded in the morning. It could be an ETF. Here's a leverage product. Top couple more, another leverage product. So I'm going to first, what I'm going to do is before we get these summary stats, because these stats here are giving us a statistical view of everything in here. Okay, it shows us, you know, well, before I say that, it divides this report into stocks that are gapped down and gapped up. And then it takes those stocks and gives us a statistical view of what happened to these groups of stocks by 10 a.m. and by the close. So we want to see first, okay, if we gapped up in the morning, opened up at 9:30, there's pre-market trading, stock was up, gapped up. That first half hour trading is probably, it's one of the highest volume periods of the regular trading hours. The regular trading hours, you could take it and say the first half hour, first hour, and the last hour, those are the highest volume periods in the regular trading hours, typically, right? Unless there could be some news in the middle, but that's what you typically see. So let's just measure the first half hour, and does this follow through? So here's what we're seeing is that in the last 20 days, we had 2,478 observations of stocks traded up in the pre-market hours, gapped up. What happened to them right from the open? Well, it looks like a little bit over 50% continued higher by 10 a.m. and a little bit below 50% went lower. On average, there was a 0.1% gain on that group of stocks. In other words, if you, notionally bought exactly the same amount of worth of stock in each one. So this, like say $1,000. Okay. So on average, they gain 0.1%. What about by the end of the day? So what happened? The idea is if people are bidding up the stock in the morning, they're probably anticipating it to go higher for whatever reason. And, did people hold on to the stock, buy more? What happened by the end of the day? Where did the stocks end up? So here we see that 48% of those stocks continued higher, 51% were down after 9:30 from the 9:30 open, and on average they lost 0.2%. So if we look at all the stocks, that this occurred so far, by the end of the day, on average they could not maintain their initial gains. More than half of them retreated. On average, there was a loss of 0.2%. Let's look at the gap down. Maybe the gap down is in reverse. Like maybe the market in the last 20 days sold into strength. Did it buy into weakness? That's the question. Did it buy into weakness? So let's look at the gap down. So here we see that stocks that were down in the morning, 46% of them from 9:30 to 10 were higher, 53% lower for an average loss of 0.2%. And by the end of the day, from 9:30 to 4, only 41% of them continued higher. 58% of them went below that opening price for an average loss of 0.8% that's from the opening price to the close. Right. So if you looked at the ones that gapped down, and if you bought the same amount of notional value in each one, right, that would have been from 9:30 to 4 o'clock. Bought at 9:30, closed out at 4 o'clock. That was an average loss of 0.8%. So this just kind of indicates that the market in regular trading hours in the last 20 days tended to be weaker overall for those stocks that were trading in pre-market hours, right? So didn't matter if the stocks gapped up in the morning on presumably positive news, positive enthusiasm, or they were down in the morning on negative news, negative enthusiasm, they tended to float lower, drift lower by the end of the day. So let's narrow down this list. Let's say, okay, what if we just looked at S&P 500 companies? Do they look different? Because there's lots of stuff in there. Let's narrow down this list and say, what about stocks that are in the S&P 500? So here's the S&P 500 stocks, right? And so we could compare it to the overall group, unfiltered, to the filtered group. Okay, this is the top one is the unfiltered, the bottom one is the filtered. So S&P 500 companies that gapped higher, right? Gapped up, they're down here, so we could see them. Gapped up in the morning. Only 47% of those continued higher from 9:30 to 10. 53% of them were lower from the open. On average, lost 0.1%. Another stat, what about to the close of the day? Well, from 9:30, right, from the 9:30 open to the close of the day, only 45% ended up higher, 55% lower for an average loss of 0.4%. So from here, the S&P 500 actually did worse than the overall group, right? So even the S&P 500 stocks, the top 500 stocks did not fare well. Okay, there's weakness after the open, even when they gapped up on enthusiasm, right? Even if the early morning sentiment did not hold, and then they came back in. Okay, the majority of the time, not every time, but the majority. So let's now look at the ones that were lower. What about the S&P 500 companies? Did the early morning gap down, did that present a buying opportunity? Right, like here, so far on average, when the gapped up, it presented a selling opportunity on average, right? So what about the ones that were lower? Do we see the opposite? Do we see people coming in and scooping them at discounted prices? Okay, so let's look at the gap down. And remember, these are all the observations up here, all the ones that gapped lower. This is the filter group. So 321 observations from S&P 500 companies, this one. So this is what we're seeing, is that even the ones that opened lower, right? Even the ones that opened lower at a discount from the previous day's close, 46% of those were able to move higher from the open. 54% continued lower. So the weakness on average continued, right? What about by the end of the day? Were they able to recover? Did VWAP orders come in? Did something come in to help those stocks out? They already opened at a discount, right? Did anything come in to bring in some support? And we're not seeing that. So far, what we're seeing is that there's still more exiting, right? 43% of them were higher, but 57% of them continued lower from the opening price. That means they lost even more by the end of the day, right? They gapped lower, and by the end of the day, they were even lower than that. So they lost 0.6% on average. So really, maybe the key takeaway here is that what's happening in the regular trading hours, right? Because there are different trader cohorts that are acting in the pre-markets and that are acting in regular trading hours. So if it's certain, when we see traders in the pre-market hours, they're more active, right? It's not passive investing, it's not mutual fund buying, it's not there's no options trades going on, so they're not hedging option trades. They could be hedging maybe positions previous days, but they're not hedging any option trades going on because options don't start trading till 9:30. It's not VWAP orders. It's not, IRAs. These are active traders that are running models. They're taking in early morning data, whether it's news, economic events, earnings. They're taking that in, putting it into their model, and they're either pricing the stock higher or lower based on their anticipation or what they think that the market will do, or what they think the new price should be. But when they're either pessimistic or enthusiastic, when everything else kicks in, when during regular trading hours, when the VWAP orders kick in, the mutual funds, the IRAs, the pension funds, the options traders, the fundamental traders, the technical trader, all of them, when they come in, so far, what we're seeing is that by the end of the day, we're seeing weakness being built into the markets. Okay. And that's the last 20 days, which has been, like a month's worth of trading. So this is kind of a breakdown by trying to slice and map out what might be going on. And so, keep in mind, you could gap up and then retreat and still end up on a day. But what's happening is it's not on average building on those gains right now. So this is kind of the takeaway. Now we could look at let's look at the Dow Jones or the NASDAQ. Let's see Dow Jones. So Dow Jones Company, the top 30, we see a different story, right? So here, those that gapped up in the morning, rallied by 10 a.m., continued to rally, 52% of them, 48% lower. And by the end of the day, 52% of them were higher, 48% lower, for an average gain of 0.3%. So when we just narrowed it down now to the top Dow Jones stocks, right? There we do see a different story. Let's look at the gap down. So in the gap down, by 10 a.m., it looks like, that some of them recovered, 52% were higher, 48% lower, but on average, it's a wash. But by the end of the day, it looks 63% went lower. So whatever in those very top Dow Jones stocks, the early morning sentiment looks like by the end of the day followed through more often than not, right? So look, by the end of the day, the ones that were up, the more often than not, they went higher. The ones that were down, more often than not, they were lower. Especially, it looks like the ones that were lower were, by a bigger degree, right? 63% of the time, those stocks that were lower continued lower by the end from 9:30 to 4 for an average loss of 0.7%. So just reading these, it does look like, that regular trading hours looks like, that right now looks weaker, on balance. That's what it looks like. But let's take a look at, what if we just took a look at the tech stocks, NASDAQ 100. Let's see those. So NASDAQ 100, here, the gap up situation, 47% of them were higher, 53% lower, for an average loss of 0.1%. By the end of the day, only 48% were higher, 52% lower, for an average loss of 0.3%. So NASDAQ 100 tech heavy stocks also, even with early morning optimism, still looks like on balance drifted lower, right? Could not, most of those stocks did not hold on to those gains. You can see most of them did not hold on to their gains, and overall there's an average loss. Let's look at the gap down. So gap down, similar situation. Well, as far as weakness goes, tech stocks that opened lower by that first half hour of trading, right? So the first half hour trading, which is one of the highest volumes, the 56% of those stocks went even lower, right? They opened at 9:30 down, and by 10 a.m., they were even lower than that for an average loss of 0.3%. And by the end of the day, 60% of them were lower from the open for an average loss of 0.9%. So I guess that's the key takeaway right now. In the last 20 days, we looked at it from different angles, maybe just the Dow Jones stocks that had early morning enthusiasm kind of followed through. All the rest looks like on balance, we have been seeing weakness, right? On balance on all those stocks. So we're right at 9:27. Well, we do have that webinar coming up at 2 p.m. I'm going to stop right there.
Awesome. Webinar 2, everyone. The link to registers in the chat on YouTube. That's at 2 again, Eastern time. You have to register with IBKR. Great job, Dima. Thank you.
Yep. Thanks everyone for joining. Stay safe out there. Hope to see you guys later today. If not, maybe tomorrow morning. Have a great trading day. Stay safe.
Trade in peace, communities. Have a great